Friends, today I am going to analyze Nippon India Small Cap Fund versus Quant Small Cap Fund, Bandhan Small Cap Fund versus all other 26 small cap fund step by step in detail to find the best small cap mutual funds 2025. See, if you are not a conservative investor and your investment horizon is at least 5 to 7 years, then you must consider investing into small cap mutual funds as they can actually help to boost the overall returns of your portfolio. But how much returns can we expect from small cap mutual funds? Well, if we look at the 10-year small cap category average trailing returns, then it is around 18.48% CAGR, which is amazing. But ideally, we should keep a reasonable expectation of not more than 13 to 15% in long term in case of small cap mutual funds. Now see, in the last 1 year, the highest returns is of Bandhan Small Cap Fund, 56.7%. This is as on 4th of December. This means that if you had invested lump sum 1 lakh rupees last year in this fund, then you would have made a profit of over 56,000 rupees. Does that mean this is the best small cap fund? No. See, after Bandhan Small Cap Fund, the second highest returns is of LIC Mutual Fund, followed by ITI, followed by Invesco India, and so on. Basically, the top performers of last year, Nippon India Small Cap Fund, Quant Small Cap Fund, are not even among the top 5 performers of this year. Clearly, selecting funds only on the basis of last year's returns is a bad idea, because today's top performer could be tomorrow's worst performer. That's why in order to find the best small cap mutual funds 2025, I'm going to compare all the 29 small cap fund step by step on the basis of return consistency, down market performance and investment style. Let's get started. So first of all, I'm going to filter out funds which are not even 3 years old because we do not have enough data to analyze them, and there are already many other funds which are 10 years old and are showing consistent performance. Next, along with these, I'm also going to filter out funds whose AUM is less than 500 crores because it makes the funds more volatile and risky. So after filtering out these funds, I am now left with 29 small cap fund. Next, I am going to compare these trailing returns and mark the entries in red wherever the fund has not been able to beat both the category average and index returns. So now we can see that there are some funds like Sundaram and Union Small Cap Fund which has not been able to beat their index in all these tenures, 1, 2, 3, 5 or 10 years also. In fact, UTI and PGIM, these are only 3-year-old and still underperformed in all 3 years. So we can see there are 6 such funds which are underperforming, so I'm going to filter them out. After which I'm left with 16 small cap mutual funds. Now friends, these are trailing returns, which are point to point returns. So if we want to check return consistency, then we have to check rolling returns. Now friends, we can see the launch date of these funds are different, but most of these funds are at least 5 years old. That's why for comparing rolling returns, I have taken rolling start date from 1st April 2019. In case of ITI and Bandhan, they are only 3 years old, so I had to take the start date from 2020 itself. So the 3-year rolling return of 37.41% of Nippon India Small Cap Fund means that from the start date, 1st April 2019, if we take any 3-year period, then this fund has most likely on an average given 37.41% returns. This is what it means. So now if I compare these rolling returns with the benchmark rolling returns, you can see that there are some funds which have not beaten the benchmark rolling returns consistently over the years. And I'm looking for funds which have shown maximum consistency in beating their benchmark index. So what I'm going to do is, in each rolling period, I'm going to mark the top 6 rolling returns. Following this step, I found out that there are 6 small cap funds which have beaten their index consistently with highest returns. These are Nippon India Small Cap Fund, Quant Small Cap Fund, Tata, Bank of India, Edelweiss and Canara Robeco Small Cap Fund. So these are the 6 most consistent funds in the last 5 years. So here we found our 6 best small cap mutual funds 2025. So I'm going to filter out the rest. Now friends, the next step is very crucial. To further filter out these funds, I'm going to analyze how these funds performed in down market. But before that, friends, recently we saw the financial markets taking big hits with Nifty plunging over 300 points. Days like this are a wake-up call telling us, are you prepared for the next shift? In moments like this, it's often hard to know what's the next move should be. Stocks can drop within seconds and same might double or triple in value in a short period of time. But in today's world, one thing which is constantly growing is artificial intelligence. AI isn't going anywhere, and those who don't keep up might be left behind. So I will recommend you this free 3-hour hands-on AI training. The link to this training I have given in the description box of this video. It's usually a paid training, but absolutely free for my first 1500 audience. I have personally attended this AI hands-on training and learned 20 plus AI tools and ChatGPT hacks. I sometimes use these hacks myself to run my YouTube channel. By attending this training, you will learn how to use AI for job hunting, sorting complex data in Excel, creating unique presentations, framing business strategies, and building a personal brand. Whether you are in a tech or non-tech field, sales, HR, a founder, or a freelancer, this training is for you. Over 1 million users have already attended this training and boosted their careers. The link of the training is given in the description. Fill out the form and join the WhatsApp group for timely notification. Coming back to this, so to check the volatility and down market performance of these funds, I'm going to compare the return and risk ratios of 3 and 5 year tenures. I have already marked some entries in red and green as per comparison to the category average. 3-year alpha of Nippon India Small Cap Fund 5.97 means that this fund has outperformed the benchmark by 5.97%. We can see that all these funds have beaten the category average alpha with good margin, which is good. Next, to check volatility, we check beta. The lower the value of beta, the lower is the volatility. We can see one fund which is showing among the lowest volatility is Tata Small Cap Fund, and the fund which is showing the highest volatility is Quant Small Cap Fund. Next, Sharpe, the higher its value, the higher are the risk-adjusted returns. One of the best risk-adjusted returns, again, we can see in Tata Small Cap Fund, which is good. Next comes downside capture ratio, which is a very important ratio. Again, we can see the lowest 3-year downside capture ratio is of Tata Small Cap Fund 47. This means that when market fell, this fund corrected 53% less compared to its index. And again, we can see the highest downside capture ratio is of Quant, means when market corrects, it corrects a lot. It corrects more compared to these other 5 small cap fund. In fact, if we see the maximum drawdowns in 3 and 5 years, then we can see the maximum fall in Quant small cap itself. This clearly shows that Quant small cap fund is among the most volatile. It has the highest risk among them. But at the same time, if we look at upside capture ratio, that is also highest among all. So it gives an indication that in the past 5 years, this fund has been the most volatile and risky, but at the same time has shown potential of giving the highest returns. So after comparing the rolling returns for return consistency and the risk ratios for down market performance, this is how I would categorize these funds as per my analysis. These are not recommendations and these are based on past performance. So there is no guarantee that they are going to perform the same in future. But as of now, this is how they have performed. So Quant Small Cap Fund has shown high return potential with high risk. Similarly, Nippon India Small Cap Fund has shown high return potential but with above average risk, and Tata Small Cap Fund has shown above average return performance with below average risk. Now, as per this categorization of mine, I am going to filter out Bank of India, Edelweiss and Canara Robeco because compared to this risk versus return, Tata Small Cap has better combination of below average risk and above average return. So finally, after filtering them out, I'm left with 3 best small cap mutual fund 2025. Nippon India Small Cap Fund, Quant Small Cap Fund and Tata Small Cap Fund. These are not my recommendations at all. I'm not a financial advisor. Please do your own research. But wait, before you decide which fund you want to go for, there's one more very important parameter left which you must consider before deciding the fund that you want to invest in, and that parameter is investing style. For that, I'm going to quickly do a portfolio analysis. If we look at the top 3 sectors, then we can see the top 2 sectors in which these funds have the highest allocations are financial and services sector. And the difference is the third highest sector allocation is in capital goods in case of Nippon India, healthcare in case of Quant Small Cap, and chemicals in case of Tata Small Cap Fund. If we talk about stock holdings, then Nippon has the highest number of holding 225 stocks in its portfolio, and you would see that it mostly does not exceed more than 1 to 2% allocation in one stock. They They mostly do this because they have the highest AUM compared to 26,000 of Quant and 9,000 of Tata Small Cap. So since they have a lot of AUM to manage and small caps are a risky segment, so they have followed the strategy of not concentrating too much in a few stocks. Like you can see, the top 10 stock concentration is only 14% in case of Nippon. In case of Quant Small Cap, the concentration in top 10 stocks is 41%, and in case of Tata Small Cap, it is 35%. If we talk about PE, the PE of Nippon and Quant are currently looking better, 29. If we talk about turnover ratio, Nippon and Tata Small Cap has very low turnover ratio. Basically, if turnover ratio is 100%, it means that in last 1 year, the holdings of the portfolio have been completely changed. So the low turnover ratios of Nippon and Tata shows that they follow a buy and hold strategy mostly, whereas Quant has a high turnover ratio, which means they buy and sell very frequently using their VLRT framework. Currently, Nippon India Small Cap Fund and Tata Small Cap Fund can be seen following a growth investing style, and Quant Small Cap Fund is currently following a blend of both value and growth investing style. In all the three cases, their old fund managers are continuing to manage the funds, which is a good sign. And I have also mentioned the risk and return categorization that I had done. Plus, you should also look at the expense ratio. The lowest expense ratio is of Tata Small Cap, 0.34%. So now it depends on your risk-taking ability and the investing style that you would like to go for. So depending upon these factors, you can decide which is the best small cap mutual fund 2025 for you. I hope you learned something new. For more such educational content, make sure to subscribe to the channel and click on the bell icon. Thanks for watching till the end.